In today's video, you guys are going to see me execute on a trade live that made me $26,000 with one of my favorite and easiest order flow setups. Now, you guys are going to see me actually execute the trade live, where I'm going to be also talking about why I took the trade and why I exited the trade, where I did, what type of R multiple I made, and how you guys could take advantage of this setup too. So before I actually go over the trade itself, what I want to do is go over the pre-market analysis here with you guys, break down the exact reason for entry, and then we'll actually play the video where I actually showed myself executing on the trade. So first and foremost, this is the announcement that I sent to my community this morning. So if we see price break beneath the 57.43s, the 57.40s, I'm going to look for stacked imbalances and aggressive selling to short down into 57.22 and 5700 is what I actually meant to put there. So if we look at the trade itself, 57.43 is going to be this area of support that we've kind of held overnight, and we formulated on the last trading day here as well. You guys can see the support range there. We've held that support here as well, also over here as well too. Now looking at the volume profile, we've definitely accumulated inside of this range here in between the 57.60s and the 57.49s, and overnight we've just basically struggled to break above that area. So when you see accumulation like this inside of a range and you're struggling to break the top of the range, typically by the time the market opens up, what you'll see is there's going to be a breakout. And if you see prices starting to trade under this area of accumulation where the market deems is fair value, then we can expect that move to the downside since we're trading under this area. Now, this is going to be that area of support here, again, 57.43, which you guys could see also matches up with yesterday's value area low. So this is going to be a key level for me, which is why if we saw aggressive selling under this level, I would be looking to take the shorts at this range, which if we go back into this chart here, what we could see here on a bid and ask footprint chart is, although yes, we did get imbalance, we did have selling imbalances here, where I have kind of my selling imbalances set right now a little bit higher than the average. I have it set, I believe, at 200 or 250, meaning that I need to see 2 to 2.5 times the amount of contracts coming in hitting the bid in this situation versus the ask for it to be considered an imbalance, which if you compare to 704 to 350, because we're looking at this diagonally since price action is coming down a price level, then this is going to be considered an imbalance. The same thing comparing 301 to 632 and then 104 to 25 here. So although we didn't have stacked imbalances, this is going to be the market open candlestick. As price pushed higher, this is where we actually started to see that imbalance form. There's only 25 contracts that came in and hit the ask here, 104 contracts that came in and hit the bid. This is where that aggressive selling started up here. This is also where we started seeing a selling imbalance. So really what caught my eye on the selling imbalance was this 57.43.75, where we have 632 come in and hit the bid versus the 301 that came in and hit the ask, and then we have another selling imbalance here. So although there isn't like stacked selling imbalances kind of like down here, what I would have liked to see, it's still a selling imbalance. And what I wanted to actually see here was aggressive selling here as well. I wanted to see sellers get really aggressive. So this is going to be a 5 range bar chart or a 20 tick range bar chart here. Now, if we look at this delta footprint chart, what we can see is after the market actually opened up, we had buyers try and become aggressive here at the 46s, which we have passive selling going on in this area. So there was some absorption that actually held price down here. And what we see is aggressive selling start to come back into the markets, pushing price down into the 740s, which I was looking to take the entry around the 743s, which is going to be that support range. As price pushed back up into the 743s, this is basically where buyers are becoming really aggressive on the day so far, and it's still very early in the day, but you could see here that this is where buyers are becoming aggressive. So what I wanted to see basically is for price action to, or for, what I wanted to see basically was for sellers to continue to hold price under this zone, which if I were to kind of visualize this zone for you guys here. So this is the zone that I want to see sellers defend. Why? Because market open, this is where we see a lot of buying aggression here. You guys could see how many buying orders came in and actually hit the offer here at 57.45, 57.43. So now that we had aggressive sellers come in and we had these passive sellers also hold and defend this area and hold it as resistance, and we saw the close under, what I wanted to see was a little bit of a pullback back up. And if we can have new sellers continue to defend and hold this area, this is where I'd want to actually look to execute myself on the shorts. So as price action started to come back down, you can see really buyers aren't becoming that aggressive inside of this area. We're also starting to see again the imbalances, the selling imbalances on the footprint chart, or on the bid and ask footprint chart, which I just showed you recently over here. And we're actually seeing price hold and reject this area where all these buyers came in. There's really no strong buying aggression here. So really, as aggressive selling started to pick back up is where I executed myself into the position. Now, why my target was set where I have it set at, which I was looking for the 57.22s, is because we have a big gap over here and we actually have resistance at this gap. So I wanted to see if price can not only fill this gap, but also come back down to 57.22, 57.21, for a take profit level, which you guys could see I actually ended up securing 3.5R on this trade. Now that I've broken down the reason as to why I actually took the trade, I want to show you guys me actually executing on this trade live. So as you guys could see at this point, I've already executed on the position, which I'm pulling up one of my trading softwares here. Now I'm already in on the position after we had the rejection of this area. And you guys can see price action is just starting to take off. And this is the difference between using order flow and the footprint charts specifically to confirm breakouts versus just using your candlesticks. Because a lot of people would be looking to execute right now at the break of this low, which technically we're at a low of day, which gives them a horrible R multiple opportunity. Because for me, when it came down to this entry, my stop loss is just simply above this candlestick high. So my stop loss is here just at the 57.44s on the futures chart. So that's where my stop loss is placed. For people entering now all the way down here, their stops would still have to be there for a valid stop loss, giving you a really skewed R multiple, increasing your risk while decreasing your reward. I promise you guys, if you start looking at risk to reward instead of like a P&L basis, but a points basis or a tick basis where, hey, you know what, this trade is going to cost me 3 ticks. You trade an average of 2 contracts. It's going to cost me 20 ticks and you trade an average of 2 contracts, then you're able to actually focus on being process oriented instead of being P&L oriented, which is going to help you become a profitable trader a lot sooner because you're detaching yourself from the emotions and you're really just focusing on the process overall. So for me, this was a pretty small risk trade. I really was only risking like 2 points on this trade specifically. And again, like one of the main reasons why a lot of people get trapped in these fake breakouts is because they're not using any order flow softwares. They're not using a bid and ask footprint chart, which again, we're using these imbalances, these selling imbalances, especially when they're stacked selling imbalances to our advantage to confirm momentum and to confirm the breakout itself. So this is what gives me the confidence to take a position like this, which you guys could see that momentum is pushing strong. We can see cumulative delta picking up very heavily here as well. Sellers are starting to become really aggressive as we break the low here, which gives me the confidence to continue to hold the position and not take the quick scalp. And although you guys could see my P&L and I can also see my P&L as well, I'm not thinking about my P&L and this dollar figure. Like I could easily be like, yeah, I'm up 20K, I'm closing the trade. It's like, no, all right, I was risking 2 points. I'm up 4 points right now to give you a random example. I'm up 2R, which I'm up a little bit more in this situation here, which I ended up securing around 3.5R multiple on this trade. So you guys can see price action is still pushing to the downside. And this trade was literally a 3 or 4 minute trade. It was a trade taken based right off of the open and I was able to actually secure it. So as you guys can see here, actively managing my risk here, moving my stops to break even. Now, as cumulative delta starts to pick back up and sellers start to get more aggressive is when I decide to actually trail my stop loss down to that previous or down to that next candlestick low. You guys can see more volume starting to come in here to the markets. I'm just waiting and watching my position very patiently, actively managing my trade, securing profits along the way. One big problem that a lot of people do is as they're in a position, they won't increase or trail their stops. So the way I want you guys to think about risk to reward is if you're risking, let's call it $100 and you're looking to gain $600 and you're floating $300 in profit, you're no longer up only $200. You're up $300 on that trade, but you're up 4R multiple because you were risking 1R. So now for you trying to hit that full TP, you're risking your $300 in equity. And some people, they won't even move their stops to break even. They'll leave that open risk on the table, and they're technically risking $400 to gain an extra $300. So they're operating at a negative R multiple. So I want you guys to think about risk to reward in that way as well. If your target is $600 and you're floating $300 in profit, you're essentially trading at a 1-to-1 right now, because if you allow price to come all the way back on you at break even, that was a 1-to-1 trade in that situation. Although technically you only risked $100, and even if you don't close at 100, but you're in profit, $300. So it's better to always take something out of the markets than nothing at all, especially when you're putting, you know, good risk behind these trades. Which you guys can see, price is just dumping and dumping. And I did get a little bit impatient with this trade because I was up 3.5 R. I was up almost 4 R multiple at this point here. And I decided, you know what, I'm going to actually start looking to close this position. I don't want to really hold it for much longer, because one thing that did kind of concern me was the cumulative delta did die off a little bit, showing me that, you know, buyers are starting to come into the markets here, and we could potentially see a reversal. So I decided to secure the 3.5 R, not get greedy, and then call it a day from that point, which price action did go all the way down to my take profit, which I could have had a killer trade for 6.5 R if I would have just kind of held it out, which this is the 1 minute time frame, which I would have had to really sit through nothing of consolidation and price just push straight down to TP. But 3.5 R is still really solid. 3.5 R is really great for me, especially when it comes to breakouts. For some reason, I have a little bit more trouble holding my breakout setups longer than my bounce play or breaks and retest setups. But you know what? Still a really great trade. 3.5 R, still 3.5 R. I bought myself another 3.5 trades into the future. I hope you guys enjoyed this video. I hope you guys were able to benefit and learn from this video, and I'll talk to you guys in the next one.